Samantha. Look at that, brilliant. Okay, fantastic. We're just gonna get straight into it. Not got too many people in today, but that's cool because you know quality over quantity and all that. How's everyone doing? Is everyone good? Everyone doing well? Yeah.
Yeah.
All is well.
Lovely, lovely, lovely. Welcome to Sunday Study Sessions. Thanks for coming through. I haven't been here for the last couple of weeks because I've been doing some work. I've been busy. I'm working with a friend. One of my friends runs her own business, or a set of twins. So they run their own business, like a catering business. And I've been helping them with, you know, cooking and stuff like that. So we've done like a couple of festivals. We've done Juve Festival, which was good fun. Done vegan camp out, you know, so we've been, you know, running around, getting the money up so that I can have money to invest. Do you know what I'm saying? Because I've not been pushing the network marketing thing as hard. So I've got to get money from other means, you know? So, hey, Samantha, hello. Yeah, so I've got to get my money up so that I can have money to invest, which is what I've been doing for the last couple of weeks. But from what I've heard, Albert's been really looking after you guys. So he's not in the room at the minute. Let me just double check. Yeah, he's not in the room at the minute, but if you see this, Albert, thank you for looking after the people then. Definitely appreciate you, bro. Let me just find out who is in the room. Have we got anybody here who's here for the first time? Are there any first timers in here? Any like new starters? Anyone who's just come through? Or you lot all seasoned vets? Oh, we got, who's that? Let me just have a quick look. Is that Constance? Okay, hello, Constance. This is your first time, yeah?
Yes, please.
Hey, welcome, sister. Are you new to PNT or is it just your first time at a Sunday study session?
Well, I would say new to both, but I've been trying to familiarize myself with the apps, but it's been a difficult one. But with the session, this is my first time. That okay. I've been in the PNT group for a while now, about a month or thereabouts, but everything is still sounding new to me. I'm still finding my way around the whole trading thing and all that.
Yeah, understood. Okay, well, welcome. I really intend on making this session worth your while, so thank you for coming through. You, Constance, you are our target audience for the Sunday study sessions. Yeah, the Sunday study sessions are designed specifically for people who are here for the first time, for people who are new. If you have been trading for years, then this is not really for you, you know, but if you are like a beginner and you just want to get a bit of a head start, then that's what the Sunday study sessions are for. If you really want to learn how to trade well, then obviously there are videos on WoW that I would recommend that you watch. That's what WoW is for. But this is to help you to get started. That's my intention here, okay?
Okay.
Just to give you guys a little bit of background on myself and why I'm doing what I'm doing. So my name is Nate, as you can see at the bottom there. I don't even know if it's on the left or the right, so I'm just like, that's my name. And I'm a poet, I run events. I've been self-employed for a couple of years. I've got like my own clothing label. I do loads and loads of things. But obviously the pandemic slowed me down a lot. And the amazing Justin brought me into this space and helped me to find another source of income, for which I am forever grateful, you know. But when I first joined, there was a lot that I didn't understand, and I made a lot of mistakes, a lot of common mistakes. I made a lot of them, and I lost quite a bit of money. But I have been consistent, I've been diligent, and I'm sticking with it. I'm earning my money back slowly but surely. And one of the things that helped me more than anything since I've been in this space was actually a study session that was hosted by Carl Collins. If you guys know who Carl Collins is, you should do, you know, but he's been here for a while. He hosted a study session similar to this one. And in that study session, he just covered the basics. That was it. But the way that he delivered this session, it added more value to me than every video I had watched on WoW up until that point. Yeah, because strictly because it was, you know, maybe like a peer, someone close to my age. You know, it was a black man that was kind of like, he was speaking my language, you know, and I really resonated with what he said. And I thought that was so, so valuable. The only thing that I thought was missing was consistency, which is why I have decided to develop these Sunday study sessions. So the idea behind the Sunday study sessions is that we will be discussing the basics every single week. I will never go past the basics. If you want to learn advanced, then obviously that's what WOW is for. That's what Mind Hub is for. And I'm constantly telling you guys every week to go and, you know, go and watch that, go and watch WOW, go and watch Mind Hub. That's where you're going to find the meat on the bones, yeah? But this is, you know, where you're going to kind of pick up the fundamental recipe. That's what I'm trying to deliver here. So I'm sure those of you who are here, like Sister Constance, who are here for the first time, are going to find value, or obviously anybody else who is watching this video back on YouTube, because I know Justin posts all of these videos on YouTube onto a playlist. So anyone who's watching this back, anyone who's, you know, this is the first video, or, you know, you're halfway through, I know you'll get value from this. Enjoy. Okay, so what is the subject matter for today? Today, I wanted to discuss market structure. Again, nothing too deep, just market structure in its most raw form. In order for me to discuss market structure, especially because we've at least got one new starter here, I do want to start from the beginning, in as much as kind of like just a rough, what is a pip, you know, and what are we looking at? What is, you know, how do the candlesticks work? And then we can kind of dive into market structure. But today's focus, I would like to be market structure, support and resistance levels. What are they? How can we identify them? And what do they mean? Those are the questions that I hope to answer today. Is that okay with everybody? You just get a little piece of feedback.
Yes.
Yeah, that's cool. Sounds good.
Brilliant. Okay, fantastic. So I'm going to start off by sharing my screen. Share screen. Fantastic. Okay. All right, brilliant. So to begin with then, what are we looking at here? So we're looking at currency pairs. Okay, so currencies, obviously we are studying Forex. There's a lot of things that you can invest in. You can invest in companies, you can invest in commodities, you can invest in crypto, you can invest in indices. You know, there's a lot of things you can invest in. What we are going to discuss today is investing in currencies. When doing so, currencies are always measured in pairs. For example, as you can see on the top of the screen, the euro versus the pound, or underneath it, the euro versus the US dollar, or underneath it, the pound versus the dollar. So these currencies are measured in pairs. The currency on the left, or the first currency in the pair, is referred to as the base currency. I would strongly recommend you take notes, by the way, if you haven't already started, because, you know, they say note takers are money makers, yeah? So there's a lot that we're going to cover, and you definitely want to stay on top of it. So the currency on the left-hand side is referred to as the base currency. Now, the base currency is always worth one of itself. So 1 euro, 1 pound, 1 Australian dollar, right? It is always worth one of itself. The currency on the right-hand side of the pair, the second currency, is referred to as the quote currency. So the quote currency, the value of the quote currency is determined by the number on the right-hand side. So for example, using the example at the top, Euro GBP, well, Euro is the base. So the base is worth one of itself. So that means 1 euro is worth how many Great British pounds? Well, the answer is on the right-hand side. 1 euro is worth £0.85, right? But we can see that down to the decimal point is actually 0.85697 or 0.85725, depending on whether you're looking at the low or the high. The spread doesn't make too much of a difference for what we're going to be discussing today. What's important is that you see that 1 euro is worth 85 pence, whether you're looking at the number on the left or the number on the right. Let's drop down one. How many dollars is 1 euro worth? Well, €1 is worth $1.18. Again, whether you're looking at the number on the left or the number on the right, €1 is worth $1.18. What about the pound dollar? £1 is worth how many dollars? £1 is worth $1.38. Okay, that's simple enough for everybody. Is anyone not understanding that? Is that making sense to everyone?
Yeah. Yeah.
Thank you. Brilliant. Excellent. Okay, so in its rawest, most fundamental form, that's what we're looking at here. Okay, there's obviously a lot more information on there. As I said, there's the spread, there's the differences in numbers, there's a lot going on, but none of it is we're not going to discuss the pipette and all of that today. I just want you guys to understand the basis. Okay, £1 is worth $1.38. Let's open the pound dollar. Zoom out a little bit. I'm going to switch to the monthly chart. Okay, so as you can see, this blue line that's going across the middle, lines up with one of the numbers on the right-hand side. Now, you see when I move left and right, the blue line goes up and down, but it's still focused on the same number, yeah? It's the same number. So the number's not changing. It's just that our view is changing. Obviously, if we zoom in and we zoom out, the number on the right-hand side is not changing. That number on the right-hand side is current price, okay? Current price. This is where price is right now. £1, remember we're looking at the pound dollar, £1 is worth $1.38. Okay, remember we just saw that on the other screen. £1 is worth $1.38. That is current price, okay? Now, obviously we're looking at this. This is the monthly chart. So again, just to give a little bit more insight on what that means, the monthly chart, these charts are broken down into candlesticks, as you can see. When you zoom out, it just looks like one long line, but when you zoom in, you can see that it's broken down into little blocks. These little blocks are called candlesticks, okay? Each candlestick represents a period of time. So there are a few options here. There's M1, M5, M15, 30, H1, H4. The M in this instance stands for minute. 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, and 1 month. Okay. Now, as you can see, the month is slightly grayed out because that's the screen that we're looking at right now. We're looking at the monthly screen. So what that means is that each candlestick represents 1 month. Each candlestick represents 1 month. January, February, March, April, May, June, July, August, and September, which is where we are currently. Yeah. Each candlestick represents 1 month. And as I said, because this is where we are currently, this is current price. This blue line here, 1.38. This is current price. Right now, this exact moment in time, £1 is worth $1.38. And there is the proof. Okay. When you zoom out, you can see that obviously over time, the value has dropped. £1 was at one point was down here. £1 was worth $1.20. At one point it was over here. £1 was worth $1.30. But currently it's worth $1.38. Excellent. Okay. Now, as I said, this is the monthly chart in which each candlestick represents 1 month. We can swap to, for example, the weekly chart where each candlestick represents 1 week. Now, it's a little bit more detailed because obviously it takes 4 weeks, sometimes 5 weeks in the space of a month, 4.5 weeks, give or take, in the space of 1 month, right? So it's a little bit more detailed. You can see a little bit more information, but it's the same chart that we're looking at. It's still GBP USD. It's just a little bit more detailed. You can zoom in even more to the daily chart where each candlestick represents 1 day, and you can really zoom in on the activity that's happening. You can zoom into the hour, where each candlestick represents 1 hour. And all of this is relevant, pertaining to our discussion. And we will find out why probably in about 10, 15 minutes or so. Okay. So let's go back to the monthly chart. And this is where we're going to start our analysis of market structure. So what is market structure? Well, as the chart is being formed, price is extremely volatile. Yeah, price is going up, down, it's bouncing around. And there are a lot of things that affect the value of a chart. One of those things is the economy of the country that you are studying. So let's say, for example, the economy of Britain goes down. If the economy of Britain goes down, then the pound will be more valuable or the pound will be less valuable. Anybody? Anyone want to answer that for me? If the economy of Britain goes down, will the pound be more valuable or less valuable than it currently is?
Less valuable.
It will be less valuable. Less valuable.
Exactly. Yeah. Excellent. So right now, £1 is worth $1.38. But if £1 was less valuable, then £1 will be worth less than $1.38. £1 would be worth $1.37, $1.36, $1.35, yeah? And the value of the pound will be going down. If the economy of Britain goes up, if Britain gets stronger for whatever reason, yeah, for whatever reason, then the value of the pound is going to go up. Yeah, does that make sense to everybody? Sounds like it. Everyone jumps in with the answer, yeah? So it sounds like everyone's on it. Okay, wicked. All right. There is also the economy of the quote currency. So right now we are looking at the pound dollar. So obviously the pound is the base currency, true. But there's also the quote currency. Because if the economy of America goes up or down, that is also going to affect the chart. If $1 becomes more valuable, let's say incredibly, like massively valuable, then £1 won't be worth $1.38 anymore because $1 is now worth a lot more. Do you know what I mean? So £1 will be worth less. £1 will be worth $1.20 because now the dollar is more valuable. Okay, so that's something that's worth bearing in mind. One thing that will affect the chart is the economy of the country that the chart is representing. So while you are studying your chosen currency pair, right? It's good to kind of pick one and stick with it because then you can keep an eye on the country. You can keep an eye on the economy of the country that the chart represents. Another thing that will affect these charts are buyers and sellers like you and I. Okay, so let's say, for example, you run a business. Now, if I invest £1 into your business is not going to thrive. Your business is not going to do anything, right? I've just given you £1. You'll probably spend it on a bar of chocolate and done, right? However, if thousands and thousands or millions of us invest £1 in your business, your business is now worth millions of pounds, right? The value of your business is going to go up. Okay, so if loads and loads of people invest in the pound at the same time, then the value of the pound is going to react to that. Yeah, if loads of people invest in the British economy or in this chart or in whatever, it doesn't have to be GBP USD. It could be GBP JPY. It could be GBP Euro. It could be GBP anything, right? It doesn't have to be GBP USD. But if people are investing in the value of the pound, then the value of the pound will go up if enough people are investing in it at any given moment. That will affect that. Why would a lot of people invest at the same time? We'll come to that in just a minute. Okay. Another thing that can and does affect the value of a currency is the banks, institutional traders, the banks. Now, they actually do manipulate the markets. And that's one of the things that makes cryptocurrency so special because they don't really have any weight when it comes to cryptocurrency. But when it comes to the foreign exchange market, the banks can and do invest your money. If you have money in a bank, then the chances are they are investing your money, and turning a profit and giving you a 0.000001% at the end of the year, a little 3 pence at the end of on your bank statement. That's if you have money in a bank, right? The banks have enough money to invest. Remember I said to you, if millions of people invest £1, well, how about if a bank invests millions of pounds, you know, or they invest large amounts of pounds at any given moment? That is going to affect the chart. Even if it's slightly, you know, they do have the know-how and they do have the resources to affect the way that the chart moves. Okay, so that's something else to look out for. So I think we've mentioned 3 things so far that affects the value of the chart: the economy of the country, investors like you and I, and the banks. The 4th thing that we're going to talk about is market structure. Okay, and market structure, I believe, is one of the primary things that affects the value of a currency. What is market structure? Well, as we can see, you know, the chart is incredibly, oh, I've just closed it by mistake. Hold on. As we can see, the chart is incredibly, you know, random. It's zigzagging around all over the place. However, there are certain times where the market is slightly more predictable than others. Slightly more predictable than others. Now, where is current price right now? Right now, it's at 1.38. Let's just say for ease of math, okay, that we're looking at 1.40. Let's just say, just to make the math easy, because 1.38 is a bit of an odd number, 138. Let's just say it's 140, yeah, 1.4. Okay. All right. Now, if you notice, price started up here and it's dropped down to where? To 1.4, right? Then it's risen up to the top, then it's dropped down again, but look at where it stopped. Pay attention to where it stopped, 1.4. Okay, it's gone up again, it's come back and it's dropped. We could say this is 1.4 again, maybe give or take. There's another bounce here at 1.4, and then the market's broken down below that 1.4 level. Yeah, it's come back up and look what's happened. It's touched 1.4 and dropped down again. It's come back up and it's currently at 1.4 again. Okay, so it wouldn't be too far-fetched to say that every time the market touches 1.4, it reacts. It wouldn't be so far-fetched to say every time the market touches 1.4, it reacts. Now, we know it's not every single time, because let me zoom in to make this a bit clearer. Because as you can see, right here, sorry, my phone holder's stopping me from getting my thing. There you go. As you can see right here, price has come down, bounced off of the 1.4, and then it's broken through the 1.4. So it's not every single time it touches 1.4, it's going to bounce. Sometimes price is going to break through that level. However, as a general rule of thumb, we can see that whenever the market touches 1.4, it seems to react. Is everybody else seeing that as well, or is it just me?
Yeah, I can see that.
Yeah, we can see that.
Yeah. Excellent. All right, but it's not just 1.4. There are other levels that the market is reacting to as well, right? It's not just 1.4. So we've got the 1.4 level that the market is reacting to here. We also have 1.2 that the market reacts to. We also have 1.7 that the market reacts to. Yeah, whenever the market comes to 1.7, it reacts here, it reacts here, it reacts here. So whenever the market comes to that level, it reacts, right? That is the essence, that is the fundamental basis of market structure. There are certain levels that the market finds where it reacts to those levels, okay? And our job as traders, I guess, is to analyze the market to find out where those levels are on the currency pair that you've decided to study, to find out where those levels are and to invest, because we believe that once it reaches this level, something is going to happen. So for example, we're currently at 1.4. So if I said to you, every time the market hits 1.4, it reacts, right? As soon as it hits this 1.4 here, what do you anticipate is going to happen? Do you think it's going to continue going up, or do you think it's going to react and bounce down? Now, the short answer is that nobody knows. Yeah, nobody knows what the market is going to do. The market does whatever it wants to do, right? No one can, Warren Buffett doesn't know what's going to happen tomorrow. If you've seen the film The Big Short, really good watch, then that will tell you how powerful insider information can be. If you have like a really good tip and you're like, you know what, I know that this is going to happen, this is definitely going to happen, then that's great. That will give you an edge over the market. However, even in that movie, the protagonist, he didn't know when the market was going to drop. He just knew that the market was going to drop. He couldn't tell you it's going to drop today. He couldn't tell you the date it was going to drop. He just knew it was going to happen at some point, right? So right here, we're looking at this, and I can say to you, I believe that because we've now hit this level 1.4, I think the market's going to drop. And look, we've already gone down to 1.38, yeah, in real life. So I think over time, this might continue to go down until it finally reaches this 1.2 level again, and then it might bounce again. I could be wrong. It might turn around and break through and climb back up. And if it does, great, long live the pound. Do you know what I'm saying? It makes no difference, really. If it goes up, you make money. If it goes down, you make money. What's important is that you understand how to read the chart. Yeah, and that's what we're looking at right now. That's what we're understanding the fundamentals of market structure right now. Okay. Okay, so there are two terms that you need to fully understand in order to grasp market structure. The first is support, S-U-P-P-O-R-T, support. The second is resistance. I think that's pretty neat, actually, considering I'm writing it on my phone. Support and resistance, okay? So what are support and resistance? Support and resistance are, in a nutshell, those are the two terms when it comes to market structure. So when price is on its way down, price is heading down, and it finds a level that it respects, and then it respects that level and turns around and comes back up, this level here is called a support level. So the market was falling until it found support, and the support helped the market to climb back up. Okay, so it was falling, it found support, the support helped the market to climb back up. When the market's on the way up and it finds a level that stops it from climbing any further and pushes it back down, so it was climbing up, it's hit this level, and that level's forced it to come back down, that level is referred to as resistance. Hold on, let me just grab my water. That level is referred to as resistance. Okay, so you got support at the bottom and you got resistance at the top. Now, just to be clear, support and resistance are not necessarily exclusive. As we can see from looking at this 1.4 level, for example, this is support because price was going down. It found support at 1.4 and then climbed back up. It was going down. It found support at 1.4 and then climbed back up. But if you follow it to the right, it was climbing up. It was climbing up. And then it met resistance at 1.4. It met resistance at 1.4 and it was pushed back down. So 1.4 can act as either support or resistance, okay, on this particular currency pair, GBP USD. 1.4 can act as either support or resistance, yeah, or any number, any level that the market chooses to respect can and does act as either support or resistance. Another example, 1.7. So here, it is clearly a support level. Price is coming down, it hits 1.7 and it bounces up. Here, it clearly acts as a resistance level. Price is coming up, it hits 1.7 and it drops down. You can see it here as well. if you notice it, the wick just touches that line. Yeah, that is the essence. That is the fundamental principle of market structure, of a support and resistance level. Okay, so what is support can and does act as resistance. Is this much making sense to everybody so far? Do we have any questions?
Perfect.
Yes,
So
it makes
far,
sense.
Yeah.
Good, thank you.
Lovely. I'm so glad. I'm so glad. How about you, Sister Constance? I don't think I heard your voice. Are you following this?
Yes, I am. Yes, I am.
Yeah, this is helpful. Okay, brilliant. Love to hear it. Okay.
Yes.
So the last thing then to cover, or the next thing to cover, I should say, is the time frames, which we looked at a minute ago. So support and resistance, as I mentioned, we're currently looking at the monthly time frame. The support and resistance doesn't only exist on the monthly time frame. Obviously, now we know what we're looking at, we can zoom in and we can see that same thing on a smaller scale, or on a more detailed scale. So let me just zoom into this section here. We just zoom into that section there. There you go. Okay, so here we can see price hits 1.2, it goes up, it hits 1.4, it comes down, it hits 1.2, and it does something here, hits 1.2 again, it goes up, it hits 1.4. Okay, we can see that on the monthly time frame, where each candlestick represents 1 month: January, February, March, April, May, June, July, August, September. Yeah, we can see that on the monthly time frame, where each candlestick represents 1 month. Now I'm going to switch to the weekly time frame. I'm going to zoom out a tiny little bit. There you go. So this is now week by week. Okay, and we can see this is the same structure. This is the same chart. This is still the GBP USD, except it is now the weekly chart. Okay. So we can see that we've hit the 1.2 level, we've come up, we've hit the 1.4 level, we've hit the 1.2, we've done that little thing in the middle, we've hit the 1.2 again, and we've come back up and hit the 1.4. Okay, now why is this helpful? Why is this helpful? Because it helps us to pinpoint when we should enter the market. That's what it does. It helps us to pinpoint the very best time for us to enter the market and to close the sale. Right? For example, let me see if I can zoom in a little bit more. Now, as I said, if like me, you believe that when we hit 1.4, the market's going to drop, I would be zooming in. Instead of looking at the monthly chart, I'd be zooming in and waiting for this optimal moment. Look how perfect this moment is. You know, I wonder if I would be able to enter the market right here. How great would that be if I were able to do that? If I had the skill to enter the market at that point, right? Well, it is possible. It is possible. And what I would do is I would zoom in even more than this. Let's have a look at the daily chart. Zoom out a little bit so you can get the picture. Okay, so this is the section. Now we can see each candlestick here represents 1 day. And we can see this is the top bit that we were looking at earlier. But obviously we can see it's in much, much more detail than it was before. This is the first spike. This is the second spike. Let me just go back to the weekly so you can see what I'm talking about. See it there? First spike, second spike. Yeah, on the monthly. First spike, second spike. Right? So back to the daily. Zoom out again. There we go. First spike, second spike. Now look at how much more information we have on this daily chart. We can see exactly what's happening day to day. We can watch this happen in slow motion and we can really pinpoint our entry. Now, obviously, you can see that it took quite a while for the market to react to this 1.4 level. It actually took quite some time. In fact, if we're being real, where's 1.4? 1.4 is about here. So the market's gone above the 1.4 level, it's come back down, it's touched the 1.4 level. Hold on, see it there? Yeah, it's touched the 1.4 level. Then it's gone back up. So now, as an investor, I might be thinking, oh, maybe the market's going to continue upwards. And I'm going to be patient. I'm not just going to jump in. I'm going to wait to see what happens, right? Markets had a bit of a, you know, a bit of a passer over here. Now, if I, looking at the monthly chart, have convinced myself that price is going to go down, then I'm looking for any selling opportunity, yeah? If I am unsure, then I'm not going to enter the market. But if I'm confident and I'm thinking, yeah, do you know what? I think price is going to be going down, then I'm looking for a selling opportunity. I'm looking for a candlestick pattern which suggests that price is about to drop. For example, this one. We're not really going to cover it too much today, but we'll do a study session on candlesticks one day in the near future. Promise. We'll do a study session on candlesticks. We have got some that we've already done. So if you can make time, then hit up Justin for the link, go to the YouTube page and find some of the previous episodes of the Sunday study sessions where we're talking about candlesticks, yeah? But this is what we're looking at. So I'm looking for an opportunity to jump in on the sell. I will find my opportunity. I'll jump in. I'll manage my risk. I'll probably put my stop loss up above the 1.4 to whatever level. You know, my entry point would be here. I mean, this isn't really a trade that I would take because this is like a 200 pip stop loss. But this is just to give you guys an indication. Obviously, this is the daily chart. Oh, this is the daily chart. So I personally don't trade the daily chart. Me personally, I would be more looking on the at least hour 4 chart for an opportunity to enter. And obviously, as you can see, that gives us a lot more information. This is the first spike. This is the second spike. So again, you know, now I'm looking at this. Every candlestick represents 4 hours. And I'm looking at this and I'm looking for an opportunity to enter. And, you know, I'm managing my risk and I'm catching my trades, right? But of course, it's going to take time for the market to actually do this on the monthly chart. In order for the market, hold on, that's what I'm looking for. In order for the market to do this, right, which looks so simple, it looks so simple to us right now, right? It could take 2 to 3 years for that to happen. In between each of these columns, is 1 year. Yeah, this is the monthly chart where each candlestick represents 1 month. So if we zoom in and we look at, say, this one, we can see that is January, February, March, April, May, June, July, August, September, October, November, December. 12 candlesticks, okay? So we just zoom out again. So for price on the monthly chart to drop down to here, it could take up to 2 years to happen. Do you know what I mean? Now, if you are a wealthy person and you're investing for the long term, do you know what I mean? And you're chucking in a couple of grand and you're just going to leave it and let it do its thing for a couple of years, then good for you. That's you know, brilliant. That's probably one of the best ways to trade, in my opinion. But it's not the only way to trade. And it's not something that, you know, everyone can afford to do. It's not something that everyone has time to do. So if, like me, you want to try and catch a quicker trade, then you're going to want to zoom into maybe the hour 4 or the hour 1 chart and look for an entry point and close your trade out before the end of the day. Yeah, if you jump into a trade based on your analysis of the monthly chart, right, it could take years for that trade to come to fruition. For example, look at this. Let's just say, for example, you entered the trade here thinking it's going to come down to 1.2, right? Firstly, this is 4 months. 4 months, right? Secondly, as soon as we've got down to here, at the end of the year, it starts to come back up again. yeah, and then we're back up here again. And then it drops down. This, to get from here to here, took what, is that a year and a half? Is that a year and a half maybe? Yeah, to actually get down there. And if your take profit was down here or up here, for example, then yeah, you're looking at 2 years for it to get from there to there, you know? So this is something that is going to take a while, you know? Whereas if you were trading day by day by day by day, then obviously every single day there's an opportunity for you to make money. And looking at the overall picture, for example, on the monthly chart, can give you something that is called a directional bias. Okay, so you've got a directional bias. You've got like an opinion. It's like, okay, where are we now? Let me just go back to current. Okay, so this is where we are now. I believe, as I said, I could be wrong. I don't know. I don't really care. It's not even that deep, right? But I believe that price is going to go down back to 1.2 because that's what it's done. It's gone up, it's gone down, it's gone up. I think it's going to go back down. It could break through this 1.4 level and continue upwards. If it does, fair enough. I am not trading over the next 2 years. I'm going to be jumping into trades every day. So I'm going to be watching this happen as it happens. But I have a directional bias. I think price is going to go down, right? So because I have a directional bias, now every day, what I can do is I can go into the daily chart, for example, and look for an opportunity to enter the market. Now, the last thing I want to say about market structure before I take any questions is that market structure doesn't just operate on, as I think I said this already actually, on the monthly chart, but it operates on all different time frames. However, it shows you more information on the smaller time frames. So on the monthly, we found 3 levels, didn't we? We found 1.4, 1.2, and 1.7. There are, of course, other levels on there, but you know, we didn't zoom in on all of them. But we were able to clearly identify 1.7, 1.4, and 1.2. You could also say 2.0, yeah, if you wanted to. Whatever this is, that 1.92, 1.9. Yeah, you could say we found a couple of levels that the market respects, right? If you really wanted to be, you know, on it, you could say, okay, maybe there's one here. I don't know, probably not actually. But if you look at just this section here, you're going to see 1.4 and you're going to see 1.2. Oh, and there was this as well, wasn't it? What's that, 1.35, let's say? Okay, so you've got these levels here. But when you zoom in, it shows you a little bit more. Let's go to the daily chart and look at this section again. Is this it? Yeah, this is it. Yeah, this, is that it? Yeah, that's it, okay. Oh, right, yeah, I'm proper zoomed in, no, okay, hold on. Let's go to the weekly chart. That might give us a bit more. So on the weekly chart, this is the whole section. Now we can see a little bit more, right? We can see more information. We can still see the 1.4, we can still see the 1.2, and we can still see the 1.3, or was it 1.35? But you know, we can also see this line here, which matches up with that line. So we see one touch there, we see another touch there, we see another touch there, we see another touch there, and we see another touch there. You know, so we've got that line there, which you can't really see when you're zoomed all the way out, but you can see it now. Do you know what I'm saying? You can see a touch here, a touch here, a touch here, and a touch here, you know, which is a lot clearer now that we've zoomed in. Let's zoom in again. I know we can't see as much because obviously I can't zoom out to show you the whole thing. We can only see the peaks at the end. But, you know, you can see a lot more information. Again, you can see more support and resistance levels when you're zoomed in. The more zoomed in you are, the more you're able to see. In fact, the more zoomed in you are, the more support and resistance levels exist. If we go to the hour chart, for example, right, we're zoomed all the way in now. We're zoomed right in, okay? This hourly chart here means that in between each of these columns is 1 day, okay? So this is literally just the month of August. This is 1 month. Remember, 1 month is 1 candlestick on the monthly chart. 1 month is 1 candlestick, but this is simply the month of August. If you look at the bottom of the screen, August, August. Yeah, this is 1 month. We can see this support level here. We can see this support level here. Sorry, resistance level here, which matches up with that one. Support level there, support level there. You know, now these, you can't see them when you're looking at the bigger picture, but the more you zoom in, the more opportunities you are able to see. The more you zoom in, the more opportunities you're able to see. And one last thing, actually, which I've just remembered to add as well, is that support and resistance levels, they don't just exist horizontally, they also exist diagonally. So I wonder if this is a good example. It doesn't look like a great one, but we can see here that the market is climbing up a channel. It touches this, it goes down, it touches that, it goes up, it touches that, it goes down, it touches that, it goes up. You know, the market is climbing up this channel, right? That tells us, or with that, we can see that the market respects support and resistance levels, not just horizontally, but also diagonally as well. The market respects these support and resistance levels. Okay. So that's definitely something worth looking out for. That is the fundamentals of market structure. My intention for today was that you understand what market structure is. Is there anybody here who feels as though after watching this session, they do not understand what market structure is? Lovely. That's a good sound. That's a good sound.
So clear.
Okay, brilliant. Yeah, making sense?
Yeah, it's making sense, Nathan.
Perfect sense.
Yep, definitely.
Fantastic. Yep. Brilliant. Okay. That kind of concludes this Sunday study session then, guys. It's been just under an hour. Does anyone have any questions about market structure? So let me do that. Let me do the eye contact thing as well, because that's always important to do.
No problem, bro. No questions, bro.
No questions. Okay, lovely. Fantastic. Guys, thank you so much for coming through. Yes, Albert. Good to see you, bro. Welcome.
Yeah. Nathan, if you want to go through the...
You all right?
Oh, yeah, sorry, I can hear someone
so
asking a question.
Thank you.
If you could just mute yourself for me, please, guys, because I've got some sisters asking a question.
Nathan, I was asking, you know, you mentioned the YouTube where we can look up the previous sessions. Is it PNT YouTube, or which YouTube is that?
I think it's actually No Pips, No Sleep. It's Justin's YouTube. Justin, have you posted the link in the chat? Justin, let me have a quick look and see if it's in there, because I know Justin normally pops in. Oh no, it's not in there yet. Okay. Do you know what? I'll find the link for you, sister, and I'll post it in the group chat. Yeah, I'll post it in the Telegram.
Oh, okay. That would be great. Thank you.
Yeah.
Yeah.
Look, it's just been posted in the chat now. You see it? So if you copy that link, or if you follow that link, then that's the one. Can you see it there?
Yes.
It's in the chat box now. Yeah. Brilliant. That link there has got all the information. That's got all the previous Sunday study sessions, including Albert's too, that he's done. Thank you again, Albert, for the last couple of weeks, bro. Definitely appreciate that, by the way. But yeah, it's got all the links to all the Sunday study sessions that we've done. I think since we've been recording them are on that list. You know, so there's a lot of information in there, and you may notice that obviously as I am learning, I am explaining things more comprehensively. So obviously, as time goes on, these Sunday study sessions are just going to improve, because I'm just studying every week, do you know what I mean, and improving myself. So as I'm learning, as I'm developing, these Sunday study sessions are getting better. And yeah, please come through to the next one. And obviously, if you get any other people come through that you want to introduce to PNT, to B, then, you know, please do send them this way. This Sunday study session is the place for them to be. This is a place for new starters. Couple other things that I actually want to mention. If any of the terminology that I've said today, you know, you haven't fully understood, then on Shift, there's a relatively new function called Shift PD, I think it is. where they break down all of the different trading terminology. So it's really worth looking at that. And also, lastly, as I mentioned at the beginning of this video, but I like to close out with this as well. These Sunday study sessions, we will only ever cover the basics. We will only ever cover the basics, yeah? So if you want an advanced study, if you want to learn strategies on how to trade, okay, then you want to be on WOW, you want to be on MindHub, you want to be interacting with the traders. What we are paying for, what I am paying for, is the opportunity to learn from and interact with professional traders. Yeah, like for example, Gus, or for example, Jeff. I can type a message and Jeff will reply to my message. That's what we're paying for. Okay, we're not paying for the Sunday study sessions. We're not really paying for the group chat. You know, we're not paying for that's added extra stuff. That's stuff that you know, we're doing to help each other, because you know we all want to win in this space. Yeah, but it's not necessarily what you are paying for. What you are paying for is access to these professional traders. So if you really want to learn how to read market structure well, then I would recommend you go on to WOW. If you really want to learn how to understand, you know, strategies and candlesticks, then I suggest you go on to WOW. But also keep coming to the Sunday study sessions, because we're going to keep on running through the fundamentals every week. But you might find after about 4 or 5 weeks that, you know, we're on a cycle, we're on a loop, and oh, I've heard this before, we're doing market structure again. Fair enough, you know. So you know, you're welcome to keep coming. Please come, please bring people, but make sure you get plugged into WOW, make sure you get plugged into MindHub, and also speak to your upline as well if you have any questions, guys. But other than that, thank you so much for coming through. I've got a busy afternoon, so I'm going to head out and get my life together. I definitely appreciate you guys. Thank you for coming, and I'm going to see you next week.
Thank you.
Nice one. Thank you, Nate.
Thank you, brother.
Thank you, Nate.
Thank you,
God bless.
Thank you.